Hi everyone and welcome to the first of our November 2021 forecasts here at Zenfinex. For those who are new to the channel, my name is Connor and I'm the Senior Market Analyst at the company who provides to you these daily videos on market commentary and also educational content occasionally. For today's video I'm going to be covering a FTSE 100 forecast for next month, and to do this I'm going to be running over the drivers in terms of the fundamentals, then I'm going to conduct a technical analysis on the chart. Enjoy. Okay, so just an overview first. This index still sits below the pre-pandemic levels, and really it's been arguably the slowest index to recover out of the most popular choices globally. However, there are finally signs that this index is going to reach those pre-pandemic levels at around 7,400, and I'll just go through some of the reasons for that now. So we have Reckitt Benckiser, which is a consumer goods company. They lifted its sales forecast. This stock actually jumped 4.4% the other day, to the top of the FTSE 100 after it raised its full-year forecast, as higher sales of cold and flu remedies and also price hikes helped this company beat analysts' estimates for third quarter sales. And if we continue to have more positive stories coming from these domestic companies, this is obviously going to help lift the FTSE 100. Furthermore, I think it's important to talk about global market sentiment, and there was some risk-off mood in October, and this is mainly due to the global central banks starting to plan to remove massive amounts of stimulus that we've seen from economies, and also hiking interest rates as we exit the pandemic. Now, it initially caused a sell-off in global indices, especially in the US. However, once again, buy the dip traders are back in full force, and we are once again talking about all-time highs. Now, this has been helped by big tech companies in the US really reporting really strong Q3 earnings, and it's meant a real buoyant market mood has come back in. And I think that's the sort of thing that's going to help drag the FTSE up with them, which we've seen in the past before. The Bank of England is getting ready to raise interest rates, but it goes right alongside economic growth, so I think this will keep the index elevated. And just the last fact that I've mentioned before is obviously the US dollar. The FTSE is more likely to be affected by global factors like a weaker dollar, as most companies listed in our index have a wider international presence. However, the dollar is looking stronger recently, and this is another factor helping the index. Let's take a look at the chart to see if we can find any buy the dip opportunities for November. Okay, so have a look at the key levels on the chart, and as always I just wanted to quickly show you where we are in comparison compared to pre-pandemic levels. If I zoom right in, this is where we had the huge drop at the start of the pandemic. So I would say that I'm going to mark this, I'm going to keep this on there. If we can get a level, let's say 7,500, I'm going to mark this as a recovery from pandemic. That's our recovery from the pandemic level. That's going to be our target throughout the videos that we do. No, I don't think it's going to quite get there in November, but I could see this by the end of the year. Where we are now on the price action is quite significant. We had this bit of consolidation period. We had this rundown, and we had this wick into the... Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. 200-day moving average, and since then we've been on a nice ride. I'd say more of a grind to the upside, but most recently yesterday's trading candle, quite a significant candle, as it confirmed to us that we've had this break of structure. And I'll mark that as a BOS, which is a break of structure to the upside, which means we can be looking for buyers. And I just want to make it clear for anyone watching, I'm not interested in selling the FTSE. Yes, of course, I think it's going to correct at some point, as always, but I'm just going to be interested in buying any dips that we have. So where could the next dip come from? That's my next thing. So the first thing I do when I look at the chart is I think, where's the liquidity? Where's there lots of retail money sitting ready to be taken to move to the upside? Well, I think the most obvious level at the moment would be here. Let me mark that for you. Liquidity, let's put that and I'll quickly confirm that with a little dollar sign here. So if anyone was buying the market now, because a lot of people would have got in here on FOMO, then their stop losses may have been just sitting below these lows. But what I find significant about this is, if I zoom right in, you can see the very smallest piece of price inefficiency still yet to be filled. FVG, fair value gap. And you can see a nice order block level. I'd have this as my order block. It is quite large, but maybe we can refine it on a lower time frame. Order block entry level here. So I'd like to see a situation in the FTSE where we come down and we fill the rest of this. Oh, why is that not working? There we go. Come down and fill the rest of this inefficiency. Get a wick into our order block level, and then we go looking higher to create a new higher high. Because as you can see, that's the trend that we're seeing at the moment. Really, my take profit levels, because it's going to be a trade that I hold. This is a daily time frame. I want this to be the trade that sees the recovery from the pandemic. So I'd have my entry level at this order block, stop loss just below, take profit up at the pre-pandemic levels or the recovery from the pandemic levels, and there we've got a nice 3.8 risk reward trade on a daily time frame, fairly low risk and a decent reward as well, so that's good. On the 4 hour chart, potentially, if you want to do a more shorter term play, then we could just simply trade off of these. Look at all these rejections from the 50 simple moving average. We had this crossover here as well, which is a nice bullish sign. Again, still wary of this fair value gap that we have here, but potentially maybe we can get another retest of this 50-day moving average, and then we could potentially have a buy position at the retest with a stop loss just sitting below and going looking towards the highs. This is a real intraday position, 3R trade, even if you just tested those highs there. But if you wanted to go for maybe a new higher, maybe at 7,320, then we look at around 5.4, and I'd have some of my position on there as well. RSI indicator as well, looking like it might want to correct on this 4 hour chart. So that's it for the FTSE. As I said, no interest in actually selling the market, just buying on dips. I hope I've explained some of the dips that could be coming up and the potential levels that we could be seeing. I see FTSE ending November up at around that 7,400 level, around 100 basis points behind the fully recovered pandemic level. If you've liked this video, make sure you like and subscribe to the channel. As always, it helps boost the channel and we do appreciate it. As always, drop your comments in the comment section on your opinion on the FTSE as well. Other than that, I hope everyone has a great trading day and a great trading week, and I'll catch you all for the next video, which will be tomorrow. Take care.